Hello and welcome to my YouTube channel. If you don't know me, I'm Kristy and I'm a financial advisor, business owner and also a mum. Now in this video I'm going to talk to you about the house buying process for first time buyers and what to expect and how to prepare yourself. Applying for a mortgage and buying your first home can be extremely daunting, especially when you don't understand the process. In this video, I'm going to break down the mortgage process right from the beginning, so searching for your first property right up until you get your keys for the property. The first stage of the process is speaking to a mortgage broker. The reason you do this up front is to sit down, understand your budget, understand the costs involved, so you're all prepared. Therefore, you're not going out looking at properties day to day or weekend to weekend at properties that potentially you couldn't afford. One of the main problems is if you start looking at properties first without knowing your budget, you could actually be looking at properties that are well outside of your budget. So therefore, to save you time and to save you what ifs, always speak to your mortgage advisor first up front. Therefore, you get your budget, you know what costs are involved, and you've talked into a lot more depth that you can actually narrow down your search. And then you're not wasting weekend to weekend, day to day, looking at a load of properties that potentially you cannot afford. Therefore, by speaking to a mortgage broker, you will understand your budget, you will know what costs are involved, and you're all prepared with no shocks along the way or surprises down the road. Now, once we give you your budget and you're ready to start your house hunting process, we will look at doing you something called an AIP, so an agreement in principle. There are different terminologies. Some people still call it a DIP, so decision in principle. I've even seen people call it a MIP, a mortgage in principle. All of them mean the same thing. All it is a certificate. We do a live credit check with a lender. We know then you're going to pass a lender's credit scoring. We know exactly what your top end budget would be. And you then have a certificate to prove that you have potentially been accepted for a mortgage, subject to a full underwriting. Your certificate will then tell you how much your budget is and exactly who the lender is with. Therefore, when you're out viewing properties and you're ready to make that offer, you can put your offer forward to the estate agents, and you're then in a position where you can actually prove that A, you can afford the property, B, you've already had a credit check and it gives you a stronger chance of being accepted. The next stages are ring around different estate agents, get yourself registered onto their database or their systems, make them aware the type of properties that you're after and the budget that you may have. And then what happens is if a property comes to market or there's something that maybe you've not seen on Rightmove or any other platforms that you've been house hunting for, they can send you the details or they can ring you up in readiness to get you booked in to actually view that property. Now, when you found that property, it's time to make an offer. So once you've gone back and forth with the estate agent and also your vendor, so your seller, you've finally agreed a price and your offer has now been accepted. What your estate agents will then ask is they'll want to see proof of agreement in principle and also they want to know what solicitor you want to instruct. Now, some advisors can help you with solicitors, or you can go out and search your own. Even estate agents have their own solicitors as well. So at this point, this is where you want to start looking at instructing solicitors, and then also you want to be connecting back. You want to be getting back in touch with your mortgage broker to book your final appointment. In that appointment, they're then going to run over your brand new mortgage and they're going to run over the terms and conditions of that mortgage. How this appointment actually looks, broken down, is they are going to run over your new monthly budget. They are going to run over the type of term that you're looking at. So is it a variable? Is it a fixed rate? How long do you want your fixed rate for? What the mortgage term is going to be. So is that going to be over 15, 20, 35 years? On top of that, we're then going to break down what fees. So do you get cash back? Do you get free legal? Do you get free valuation? Are there any sort of product fees on there, which they tend to range around about $999, $995. Some can be a little bit more and some can be a lot less, or there are lenders with none. So they will run over if there's any additional fees or any sort of benefits that that lender is offering at that time. Plus, they'll run over any relevant insurances. So at that stage, they're going to run over what type of insurances you need or you have to have. So it could be builder's insurance if you're buying a house. And also then they will then look at type of insurances like your life insurance, critical illness, income protection. Now, they're not mandatory, but your financial advisor or your mortgage broker have advised it for a reason. So they could be seeing any sort of shortfalls in your lifestyle. And then they will discuss in a lot more detail why they've advised those insurances and why they feel it would suit your lifestyle and why it would benefit you. And at that point, you then start making a decision what insurances you then want to take out. Once you're happy with your new mortgage, your mortgage advisor will then go away. They will submit the application with the lender. Once it's all submitted, at this point, your survey will then be instructed, also known as evaluation will be instructed. There are a few different surveys or valuations. The main one with the lender, which is 99% normally free, is a standard mortgage valuation. You then have a home buyers report, and then also you then have a full structural report. These two are at your own cost. Some lenders provide that option. Majority of them, you go out and go and instruct your own valuation. Again, your mortgage advisor can refer any local ones if they've worked with any local ones prior. So once your valuation has then been instructed, there are two parts. So one of them is the property itself. That's why a lender will send a valuer out. So they're going out, they want to know the property is worth what you've offered and what you're paying and what you're asking the lender for. So the first one is about the property. So that's the reason why the lender then sends out a valuer to go out and value the property. So what they want to see is that property is valued the same amount as what you're paying and you're not overpaying for a property. The second part is the application. So they're going to assess your income, they're going to assess your outgoings, they're going to go into a little bit more detail. And all they're looking for is to make sure what we've keyed on agreement principle matches the application and we can prove that income that we've originally declared exactly the same as it is on a mortgage application. They're going to be looking at wage slips, they're going to be looking at bank statements, they're going to request ID. Some lenders even request proof of deposit. Once your valuation comes back and the underwriter has accepted your application, you are then going to get something called an official mortgage offer, which is confirming you officially have that mortgage. Now, these mortgage offers normally last about 6 months. Some lenders will allow us to extend the mortgage offer and others will want a brand new application. So what we then need to do is just make sure that we complete your house purchase within that 6-month period. Your solicitor will also get a copy of the mortgage offer, so once they receive that, they will then put that into your file. Meanwhile, your solicitor would have contacted your council for local searches based on your property. These searches cost around about £300 upfront, and this will allow the solicitor to raise inquiries or questions in layman's terms. And then what they'll actually raise inquiries or questions about will be the property and the land that property is built on and surrounding areas. They're going to be looking at any building work or development, any extensions, the details about the local area. Going to be looking at mine and water, flood areas. Now, once they've got all the details back from these searches, they're then going to go back and forth with the seller's solicitors, the vendor's solicitors. And all they're going to do is they're going to ask questions, they're going to get their answers. If they're happy, it's then classed as satisfied. If they're not happy, they're then going to raise more questions, so more inquiries, until they get to the point that they are fully happy and satisfied. So once they're then satisfied, they're then happy that there's going to be no issues with the property going forward for you. So once the land searches are done, they've satisfied all their questions after they've gone back and forth, they're then going to send you out contracts. So at this point, you sign your contract, you then send it back to your solicitor, and you're going to start agreeing exchange dates and completion dates. So at any point up to exchange, you can pull out the property without any additional costs or any additional fees. Now, once you have exchanged and then you decide you want to pull out the property, you are then liable for any costs or fees to the seller or the buyer if you're selling a property. On exchange of contract, the solicitor will be asking for the money for the deposit and also for their services and any stamp duty costs if that is then applicable for you. At this point, once it's all been sent over, the exchange will happen and then we can then look at completing the property. Some houses allow exchange and completion on the same day, so simultaneous. It's also known as SIM. Others, they do like to exchange and then allow a couple of days or a week or two before then you're given a completion date. The average process takes about 3 to 6 months for the full house buying process, from mortgage application to collecting your keys. Things could take a little bit longer, so that is only an average time scale for a straightforward case. However, you do need to be made aware that sometimes things can take a little bit longer. If you do find this video interesting and you want to find out a little bit more about the house process or our best tips, you can view our other videos, which will help you prepare for your house buying process. That is all for us today. Any questions, please leave us any comments and we'll be happy to answer any questions that you may have. Don't forget to like and subscribe on our YouTube channel so you're all up to date with our latest videos.